Yo, what's going on, guys? It's Frank here again with another video. Last one was not very good. I'm just gonna be honest, so I'm gonna make it better. And also, I realized I didn't give out the settings that I use for the EMA, so we'll go over that as well. So, not to make this video too long, because I know people don't like to stick around and watch just half an hour of bullshit, so we'll get started really quick. So, I use the 13 EMA specifically. In combination with some of the concepts that ICT teaches. Um, so to start, I have three different EMAs. You only really need two. I recorded this video once, but I realized my mic was off. Um, so hopefully we can do this quick this time, or quick but still thorough. So I use three different EMAs, and the way I do it is I change the inputs. So if you notice, it's like a band rather than just one line. I still have just a regular EMA on, but it's just one line rather than just, or it's not just one line. It's two lines, is what I'm trying to say. So 13 EMA, one set to high on the source on TradingView. Should be able to be done on Trade as well. And the other one is set to low. And you don't need, as I said, you don't need the middle one. This is just kind of like a 50% type of thing, kind of like you do with fair value gaps, where you have like the 50%. At least I like to do it like that. But yeah, basically the whole strategy is to take taps off of the EMA, take longs or shorts off of taps on the EMA. Obviously, it depends how price is moving that day. It works best during trend days, and also I will explain why I use the bands rather than just the line. If you see a lot of people have just a line on, I like to do more of a zone, right? And that's a very specific reason why I like to do the bands. Here, you want it to be more of a zone. This is the 5 minute. I didn't mark these out on the 5 minute. We'll go back to the 1 minute here. So the idea is to trade longs or shorts off of the taps after you get a liquidity sweep. So here, I'll pull up my drawing tool, brush, and we got this high here. Turn off the magnet because it's fucking everything up. It's high there. So we have some liquidity swept, and we're about to open. This is like 9 and 9 a.m. right here, which means the volatility is coming in. And market opens, you get a nice drop. Some ICT guys would say we got an inversion here. Whatever, right? You can take shorts off of one of these, but market doesn't even open until like this point right here. So this is, I'm not really interested in getting in super early. I like to wait the first 10 minutes at least until the macro comes in, which the macro is. So people do 9:45, I'll do 9:50. And macro comes in, go ahead and tap into this gap. Just slightly. The better one was here. But since we took this here, this high, some liquidity, and I'm sure we have probably some SMT as well, I am interested in shorting. Not only that, we have a really nice slow down here to be swept. I'm pretty sure there's relative equal lows. Yeah, it's another one right here. So there is liquidity under us. And idea is to just take trades into that next draw on liquidity similar to ICT. So you can see it drop down to the 1 minute. We wait. Obviously EMA is going to chop around. Market just opened. Oftentimes you will rip right off of it, but we already got a nice move, like even before it opened. So right at 9:30, right? I look for the break under the EMA. Preferably, I mean, I don't want to see this right off the rip. It still gave a setup, but you enter off of the taps, and even more confluence if there is some sort of gap or inversion or whatever, right? Can't draw that. There you go, like that. Look at that entry right there. EMA tap. We'll turn the other one on. So yeah, it's not 100% perfect with the line. That's why I do more of a zone. Right. That's one example. Right into the lows. I mean, you would have to hold this all day, but even this is like crazy RR. All right, we'll move on to the next one. This is even the same day. You get the low swept that we mentioned later in the day into the close. So you get in on the taps. Even this is like pretty risky because they were already so near the lows. But if the draw on liquidity is right, this is high probability as well. When you get EMA taps close to liquidity, it's weird to say, but you do get pretty good taps off it because it just like slingshots it, kind of like right here. Tap to the EMA. Low wasn't swept yet, as y'all can see over here. So EMA just pushes down. So it's there's something with it as well with liquidity, I swear. Because I see it, especially when we're making a run for it. Here's an example during London session. I know some people like to trade, not me, but I'm not a big overnight guy. But look at these taps. Look at these taps. Another one there, another one there. So the idea is to wait for some sort of, and you only want to do it at certain times. This is 3 a.m. This is London Open. The last one was New York Open. You don't just do this shit in the middle of like Asia session, unless price is trending. So, yeah, we'll go over one more example, and we'll go ahead and end the video. I am gonna try to make more content on this strategy, because I know some people are intrigued by it, but we'll go over one more. Here, we have really nice liquidity swept. This was actually the last time we made all-time highs. This is July 29th. And man, just look at this. And this works best when price is actually trending. When price is doing this, yes, it's trending on a higher time frame. You will see it like on a 15-minute. You will see it react. I mean, market was just so weird the past like end of July, so. But yeah, even on the 15, it works on every time frame. Time is fractal. Look at this one on the 15. I did my markups on the lower time frame, but absolutely beautiful. You can enter on this break of the EMA on the 15. You would need to trade micros for this, or otherwise you're probably going to get liquidated trading an NQ contract. But yeah, let's go back to our last example that I was going to cover. Because I already recorded this once and it got fucked up. So, high taken, classic. I mean, basically every ICT model is just high taken, and you look for some sort of PD array to give it to you. Here, you did get exactly that. It's 9:30, so timing is just right. Macro. I mean, I don't want to say nothing about the macro, but look at this. Look at how nice that is. Starts moving right at 9:50. And notice the break under the EMA and the fair value gap there and the change in state of delivery right here. which is the last up close candle before we take liquidity. Up close or down close candle. In this case, it would be down close because we're taking buy side. But look at this. Beautiful entry right here. You can set stops. I mean, even if you enter here, I like to set stops either above the FVG or at a decent swing high, and this would be like pretty big risk. So you want to do that, and you don't want to see it break over EMA, like start reacting off it. It's gonna do this bullshit just because that's how the market is. But if you're in up here and you have a decent stop, you're gonna make some money, right? And this is the next liquidity, all the way down here. So this is 3R, 3.5R probably. And even here, yes, it wicks over it. Here, yeah, it consolidates, but you hit TP. It might take a little bit longer to hit it, but and then look at the continuation too. You can target even lower if you want to, if there is liquidity, right? But you probably just want to take your profit where you can. This was already, I mean, it's 17 points. Market wasn't moving a whole lot. Well, this is more than 17 points. Well, I don't know why that said 17. 49 points. Yeah. 49 points with a 14-point stop. Crazy. So yeah, guys, pretty much same thing. Same thing for longs and shorts. Look for liquidity. London session open right here. Look at this. Look at how the volume ticks up right at London. And I have this indicator which kind of tells you like the size of candles, and yeah, crazy. It also works really good on the 15-second, especially when you see prices in like exactly pulling back on the lower time frame, because sometimes price when we just do this. Here we pulled back, but like let's say like right here. We'll go this just so we know where it is. 1 minute EMA is right there. And then we'll drop down to the 15-second. So while the EMA, 1 minute EMA is there, 15-second was still too not aggressive enough to catch this. So we'll go down to 5-second. This is pretty cool. I mean, we're going over time, but look where the 1 minute EMA is. It's right here. Look where the 5-second. Look what the 5 seconds doing. And this is like 12. See? 5 seconds not as accurate, but certain times of the day, like this is literally the algorithms working, accumulating, dripping orders into the market. So yeah, that's pretty much it. We'll leave it there. Hope you guys enjoyed the video, and I will be uploading more on this further down the line. But for now, this is a pretty good starter video that isn't complete dog shit like the other one. So, thank you. Goodbye.